Okay, good morning, folks, and welcome to Swing Trading Today. This is Bob Desmond, and it is 5 a.m. Eastern Standard Time, September the 18th. What we're going to do this morning is first I'm going to do a audio check just to make sure I can be heard here. I'm still a newcomer to this, and forgive me if my voice is a bit off this morning. We were up late last night with members. We had a private group with members of the Contrarian Trader. We're doing that every Wednesday evening where we engage, we have conversation. I mean, there were some great questions. We were on for a while. I had some technical issues, but we worked through them. And it was really great conversation. And it was just simply an outstanding time, a great group of people, very intelligent. And thank you very much for joining in last night, members. So I'll try to work through those technical issues next week. I didn't have picture on picture last night. We had a couple of glitches, but it's a learning experience and we move on. If you wonder why I'm dressed like this, I'm going to the gym immediately after the live stream. And let's get to it. Um, Today's game day, right? We have the Federal Reserve, which is set to meet and announce the decision. Are they going to raise rates or are they not? Now, we're going to go over the pre-market activity in a moment, but before we do, I want to talk about the news out of FedEx last night. And that news was, this is posted on Zero Hedge, I'm sure it's elsewhere as well on CNBC. Bellwether FedEx shares tumble after slashing outlook, blames trade war. This is going to have an influence on the Federal Reserve. It has to, because if it's FedEx, it's other companies as well, multinationals. Now, we discussed this last night in the members' private group, and one of the members brought up, and forgive me, it's so early right now, I'm trying to just wake up. One of the members brought up, they said, maybe that this has to do with their exposure to Amazon and the fact that Amazon is moving their business away from FedEx, and that's a valid point. Uh, so we need to keep an open mind. Could it be that FedEx is using the trade wars as an excuse for their business not doing as well in hopes of a cut? Did FedEx CEO get a phone call? Hey, listen, blame the trade wars from the Federal Reserve? Who knows? This is the stuff that goes on, and we don't know what we don't know, what goes on behind the scenes. So this matters, right? So let's go to a chart of FedEx after hours last night and then in the pre-market this morning. So here's FedEx last night. We were down over 9%. And this morning, we are gapping down yet again. So this is a very, very big move, a significant move. We could retrace all the way back down to the 151 spot 54 level, if not down to the 147 spot 72 level for an extreme pullback. So let's keep an open mind here of what might happen here with FedEx and the influence that it could have on the overall market. Now, the transports as a whole, we reviewed this last night on Market Wrap with members. The daily chart as a whole, the transports are looking okay. They're holding the breakout point on a daily basis. It appeared prior to this announcement that we were going to move higher. Will FedEx have an influence on the transports? They may. They definitely will if the Federal Reserve does not cut rates today. That's pretty much a foregone conclusion. This market is going to drop like a bag of rocks. So keep an eye on FedEx. Maybe we'll get a rebound a bit after the Fed announcement if, in fact, they do cut rates. The question was asked last night, what if they cut by a half point? What happens to gold and the miners? I think that they will, at least in the case of the gold miners, We may get a quick pullback, a retest of the breakout point, and then we proceed higher. And we'll talk about gold in a moment. But this is FedEx. Let's take a look at the US dollar because something really odd happened overnight. And it's a bit concerning in that the dollar, this is a 4-hour chart, these will all be 4-hour charts. The dollar rebounded overnight in a very, very big way because we had broken down yesterday and we closed there. However, overnight we rallied back. I looked at the headlines. There was nothing big going on in the currency markets, but the dollar did rally back. Very, very strong overnight. A very impressive move. So keep an eye on the US dollar. Is it sending a signal? Not quite sure yet, but price matters, and we have certainly seen a big rally overnight. As to gold and the influence of the dollar relative to the gold markets, we're down slightly on gold. We were lower. We have since rallied back. We are consolidating very, very nicely here. And I'm not going to be the least bit surprised to see a breakout on gold. Now, the question then becomes, if we have gold behaving strong along with the US dollar, could it be that it's geopolitical risk that is driving the strength of the US dollar? In essence, it's fear driving the dollar, driving gold higher, because usually they trade inversely of each other. So I'm looking to that as my reason as to why the dollar might be strong. But again, I'm not seeing any headlines overnight to support my argument. So I have to keep an open mind. So gold is looking strong this morning. I haven't gotten to the futures yet. We'll go there in a moment, the stock market futures. Let's take a look at nat gas. We spoke about this last night in the private member session. Nat gas is looking bullish. We have a weekly breakout. We went over that chart last night. We are slightly or were slightly off the highs of the week. Now we're probing the upper band of resistance of those highs as we proceed into the new trading day. And I'm looking for a breakout above this upper band of resistance on nat gas. And we would be trading the UGAZ if you don't want that kind of volatility because that's a leveraged ETF. Look at the UNG, less volatility, and I would buy that on a breakout. Looking at the NASDAQ futures, they're down. Again, 4-hour charts, but we're holding support, right? So that's what matters. Let's bold this up here. And what I'm looking for here is a breakout on at least this 4-hour basis if the Federal Reserve cuts rates. Now, remember that the knee-jerk reaction is frequently the wrong reaction, right? So the Federal Reserve, they'll cut rates or they won't cut rates. And if they cut rates, stocks will drop really quick. The dollar will drop really quick, and all of a sudden they rebound, right? That's been exacerbated a little bit of late because now they have that stupid press conference afterwards, and that causes nothing but problems. So that extends out that knee-jerk reaction, causes more volatility, and the algos are just scraping every word that the Fed chairman says, and that's a problem. So we need to be careful as the small investor when we're trading the markets after these Federal Reserve meetings with these press conferences. It's a problem. And I wish they would do away with them, to be honest with you. Sometimes less transparency is the best bet. Taking a look at the S&P futures, unlike the NASDAQ futures, we are breaking down below this lower band of support. Now this bar opened up at 5 a.m., which is 9 minutes ago, right? So we could easily bounce back. This bar will close at 9 a.m. Eastern Standard Time. So look for a bounce back here. If we don't bounce back and we close down below this lower band of support, I would get a bit concerned, especially if we start trading down below 3,000 into the Federal Reserve meeting. So if we get the rate cut, I think that we will rally back. We went over last night in the private members group the quarterly chart and the monthly chart of the NASDAQ and I believe of the Dow Jones Industrial Average. Both look very, very strong proceeding into the end of not just the month, but to the end of the quarter. Very, very powerful setups as we proceed into Q4 2019. That assumes that the Federal Reserve cuts rates, and I'm not saying it's the right thing to do. It's probably the most irresponsible thing that the Federal Reserve could do. But if they want to preserve their independence from the federal government, because remember, they are not a government entity, they're privately owned. If they want to preserve their independence, they will do the bidding of the president and cut rates. Let's go to, and while I'm going through the final couple of charts here, if you have a chart that you want me to review, throw it in the chat box. I'll take a look at it for you because I appreciate you being here this early in the morning. We'll take a look at Bitcoin, and then I want to take a look at silver. So Bitcoin remains in a trading range, lethargic at best. There's really nothing happening here per se with Bitcoin until such time as we rally up and through this upper band of resistance here, and then of course this primary upper band of resistance. So the fact that we're still trading above the 10,000 level on Bitcoin is very, very positive. However, we're in a consolidation range. I wouldn't go buying Bitcoin just yet. For a trade, I like the ever tightening Bollinger Bands here on a 4-hour basis. I would look for a breakout above this upper band of resistance, then a rally up and through the 10,800 mark, and then it's probably going to be off to the races once we close above the 11,000 level. Those are the critical resistance levels above. Let's take a look at crude oil because that could influence the Fed decision. And crude oil, luckily this morning, is down. And you may be saying, why would the price of a barrel of oil influence the Federal Reserve's decision to cut rates or to not cut rates? It's fairly simple in that oil is inflationary, right? If you have a spike, this is the biggest spike in the barrel of oil since the Gulf War back in the early 1990s. So the Federal Reserve is already dealing with inflation at 2.4%, but their target is 2% on average. This is what Jay Powell has said in the past, on average. So he's been willing to allow inflation to run hot absent a geopolitical event. What happened this past weekend? A geopolitical event, which could spike inflation. Now, growth is stagnating in the United States. It's stagnating globally. Manufacturing is in a recession globally. So on that front, he's forced to cut rates, but he's got no GDP growth. So if he cuts rates and you have inflation due to energy, big problem there. Right, so it's not hyperinflation, it's stagflation, and that's great for gold. In a sick way for my trade, that's what would be ideal for my position in gold and the miners and silver to proceed higher. As a patriot, as an American, it's not what I want to see. I want to see my country do great. But unfortunately, the stage has been set for stagflation. So this is the catalyst longer term of what we're looking for gold and the miners to proceed higher. So getting back to oil, oil is pulling back some this morning. It's still strong on the week. We have a big gap up here. So there's obviously still some risk premium priced into oil, despite the fact that we pulled back yesterday and we are pulling back yet again this morning. It's not a major pullback this morning. So we're holding much of the gains from the close of last Friday on the price of oil. and the symbol is ADBE. Let's take a look at it. I'll do a couple of requests here. If you have a request, I'll bring it up. I believe ADBE is Adobe, if memory serves. I believe I'm right. Let's okay. Sorry for the awkward silence and the blue screen here. Normally I would use TrendSpider, but I didn't have it up and prepared. All right, so what I like to do is do analysis from a higher level view, right? So let's begin. I haven't taken a look at Adobe in quite some time. So I'm going to begin with a monthly view. I want to know where Adobe has been to identify where it might be going. That's the higher level view of technical analysis. Now, a monthly chart, an outstanding chart here. I mean, wow. Really a beautiful setup here. I need my coffee. Sorry. A beautiful setup here. There are a couple of concerns that I have about the chart, but nothing to trade off of just yet. So I'm going to annotate this and we'll talk about it. So we broke down below this rising support level last month. And what we're seeing here also is a divergence on, it's not necessarily a divergence, it's a weakening of the RSI. So what I'm looking for here are signs of why we would want to buy the stock. Whoa. And you can see that on a monthly basis where it's very tired. It's done a lot here. And I wouldn't go saying that it's a short by any stretch of the imagination, yet anyway. But on a monthly basis, it's a bit of a concern. Oh, I didn't see Adobe earnings last night. Okay. All right. So we'll go to the pre-market activity. It's not really going to tell us much until the open, but let's see whether or not the daily chart was sending us any signals about a earnings report that was going to disappoint. Not really. I mean, it's a fairly bullish chart. So it doesn't look like there were any leaks. In fact, we broke out yesterday on a daily basis. RSI validated the breakout point. So on a daily basis, the chart looks good. Let's go to the intraday chart, the pre-market activity. Yeah, so this goes to show you the knee-jerk reaction is frequently the wrong one. So they reported earnings, they spiked it higher, and then dropped it like a rock. So obviously it looks as though Adobe's setting up for a weak session this morning. Would I go buying the dip? I would have to analyze the report. I would have to take a look at forward-looking guidance and the reason as to why Adobe had a poor earnings report. I would need to do more analysis before I decided whether or not I would want to buy these shares. At current, with the known technically, I would have to say avoid, especially with in the back of my mind now that I'm taking a look at a monthly chart and I'm seeing that while it's had a heck of a run, that we're beginning to see signs of weakness. The Stokes are rolling over on a monthly basis. RSI is beginning to weaken. We have broken down below support levels on price in the past. We have rallied back some, but we haven't been able to break out to new highs. So, me personally, right now, absent some probably a few weeks of new technical data to populate my charts, I would have to say avoid Adobe right now until more information becomes available and to see how the markets truly react. I mean, this is after hours action. Volume was pretty high in the after hours yesterday. So it looks as though the street has determined that they're not liking Adobe moving forward. So what I would have to say, let's pay attention to these guys and avoid in the short term until such time as if they reverse to close higher on the day today, then the market's sending you a signal that there's a bid underneath and they want to take the shares higher. All right, so at current, in the pre-market, I would have to say I would not buy the dip. I would avoid like the plague, right, until more data becomes known. There are going to be far too many big players out there, institutional wise, that are invested in Adobe. The first thing they're going to do is send out sell market orders, and I don't want to fight these guys. And that's it for this morning, folks. I want to say thank you for joining. Please click that subscribe button, hit the notification bell, get notified of when I begin these live streams. I want to say thank you very much. And I look forward to chatting with you tomorrow if you're going to be around. And everybody have a profitable trading day. I'll see you then.